So our next panel discussion this afternoon through until 3 o'clock is all about ethical investment, and I fully appreciate that is a subject that we could spend 3 hours on, let alone 3/4 of an hour on, but we will certainly do our best between us. So I'll just introduce everyone first. We have Carmel Giblin, who is President and CEO of the Ethical Toy Program. We have Gerry Marshall, closer to me here, CEO at Recycling Lives. That's why I should check these things. It lives and there we go. Michelle Hilliman, Head of Responsible Investment and Business Management, HSBC Alternatives, that's HSBC Global Asset Management, and last but not least, Oliver Allcock, Commercial Sustainability Manager, Financial Industry Lead, ClimatePartner. So, those are the panel. We have plenty to talk about. We'll open up to questions when we get towards the end. But I will take a seat and start with the largest question of the day about ethical investment. Where are we at the moment? There is so much that has changed in recent years, so much that is changing as we go forward in terms of sustainability. But Gerry, you're closest to me, so I'll give you the great pleasure. Where do you see we are at the moment when it comes to ethical investment?
I think what I see is that from an investor point of view, they're now looking at the overall well-being of a business. It's not just the bottom line, the EBITDA, the performance. They are looking at the environmental and the social sustainability. They're looking for businesses that have robust strategies and business models, that they have ESG at the core. And they're going to measure against that, not just the financials. It's environmental and it's social. It's really becoming to the fore.
Carmel?
Yeah, I think exactly as Gerry says. It's all about business resilience and business stability. So I think when investors are looking at organisations, those are now fundamental in their due diligence in terms of looking at a company's ability to manage and sustain.
Michelle?
Yeah, so as an investor, as an asset manager, we manage money for people. And what we're seeing is actually, since the introduction of some of the more, the regulations in the EU, people are saying, we want these products. And you're seeing a rapid increase in terms of products, money flowing into things like Article 8 and Article 9 funds. Now, those are funds that promote sustainability. So people are saying, we want that. And as an asset manager, we are looking at companies and making sure that those companies do have ESG embedded into what their processes, the policies around the S side of things. I know we tend to focus on the E side, but it's becoming more and more critical. I think across all of our asset classes, we have basically processes that embed ESG analysis. So we really wouldn't look at companies that are not really doing that. So it is the future. It is what we're doing right now as well. So it's across. We're seeing a lot of growth in that area.
Oliver?
Well, I very much agree with Michelle in that the investment community is in a position of such influence, and there's obviously enormous issues happening on our planet at the moment. And what ClimatePartner does is we help our clients to measure, reduce and offset their emissions associated to their business operations, but also their products, and that can include a portfolio of funds, it can include investments. And I think, given the billions of dollars that are being spent every year on climate mitigation and adaptation, there is every reason for ethical investment to step up and drive these processes forwards. Okay. I think that ethical investment is more about impact than actual value. I think the days of investing purely looking for financial return are hopefully behind us, and it's a broader and more considered approach to releasing those funds.
And that is very much my next question. You're talking about this changing of your guard, if you like, when the days of investing only for profit, things are starting to move. The needle is starting to shift. Where do you feel we are, all of you, on that journey between those sort of two different wings of investment, if you like? I'll open that up to all of you.
So I can go from an investor point of view. I think it depends on the region that you're speaking about. I think in Europe, we've seen that people have moved and say, we do want to invest in sustainable stuff. We do want to make sure that we can have impact, etc. You know, you mentioned, you know, actually measuring that impact. You know, there are issues around that. When you go to places like the US, there's a lot of debate in terms of where you should be going. And, you know, more and more you're seeing the tides are changing. The regulators are saying that we should be moving in that direction. Asia and certain places have lagged. You know, you're still seeing people there who are solely focused on financial. But as regulators, you know, in Hong Kong and Singapore, there's regulations coming out around sustainable investing. You're actually seeing the tide change, and you're actually seeing more and more investors are starting to say, yes, we need to invest for the benefit of the planet, for broader, more than, you know, just, you know, all stakeholders, not just shareholders.
I think building on what you've just said is also the fact that a business that manages its environmental and social kind of responsibilities is actually a more robust business. And they are, going to my earlier point, they are more resilient. So they have processes in place that investors will be interested in, because those processes and those systems help protect the reputation of the company.
Because Carmel, would you be able to sort of spell out to everyone exactly what it is you do on the ground? Because I guess that's particularly relevant for you in terms of you are out there and seeing the coalface, if you will.
Yeah, and I guess from our experience, certainly we didn't have much interaction with the investment community at all, but that has changed in the last 2 years, I would say, and increasingly so. So what we do at the Ethical Toy Program is we were created by the global toy industry. Obviously, the toy industry is very sensitive to its reputation. It's producing products for children to enjoy, and they can't be made by children or by forced labour or workers being exploited. So about 70% of the world's toys are still made in mainland China, so our work focuses on that, although we operate everywhere. But fundamentally, we go to factories and we have a standard established, and we check the factory's performance against that standard. And that will cover things like no child labour, no forced labour, but also, are the workers treated with respect? Are they paid appropriately? Do they work appropriate hours, not excessive hours? And are they working in safe conditions? And where they don't meet the standard required, we then support them to build up their standards. And we're very much focused on the impact. And we want to make sustainable improvements in the factory. We want to move from that audit kind of approach, which was a bit of a tick box, to find an issue, fix an issue. The issue repeats itself because it's never really been fixed. We look to make sustainable change within the business. And that certainly, we do a lot of work, for example, with some of the major publicly listed toy companies, where their investors will come to us and ask about the robustness of a company's commitment. So a lot of companies will say they do things, but it's actually, are they really doing it? And is
that a relatively recent change?
Yes. Yeah.
I agree. I think as investors, we would go to the company before and say, okay, have you done this? And they'll give us a checklist, and you do that. Now we're actually going even further. You have to show evidence that you've done this, but also your supply chain. So it's not just about the company that you're investing in. What are you doing in the supply chain? Are your supply chain aligned with some of the values that you yourself are having? We need that to basically evidence. And then we believe all of this actually will flow into the valuations of the company. And there are a number of surveys that show that it does impact corporate financial performance. So it's in the best interest of companies to be doing this, so that, you know, they can have basically a win in terms of they will attract the capital that they need, and we can also deliver in terms of performance for our clients as well.
Because what are the blockages, essentially, if people are wanting to make themselves attractive for ethical investing? What are the things that are stopping people doing it? Because, as I think you were saying at the start there, Oliver, there's such an opportunity there now, and that's the way things seem to be moving.
I can pick that up, certainly. I think if you do not have a robust understanding of your ESG strategy and indeed the associated risks, you are putting yourself out of an investor's vision. forgive me, because ClimatePartner is very much focused on environmental and biodiversity issues, so my answers are quite skewed towards this rather than the broader ESG piece. But it's about calculating the behaviors and the consequences of your activities and making sure that you are holistic with it, about looking at your supply chain, at your scope 3, and really making sure that you are driving changes in behavior, and that you are really taking accountability for all of the third parties that you're operating with, so that you can be presenting an attractive proposition to investors.
I think that's true. I think we also have to acknowledge that you need to invest in systems. A lot of companies will need to actually use hard dollars to invest in systems that can actually capture that information, working with yourself or other stuff. But they also need to find people who have the expertise to actually interpret some of this data as well. I think, if you can look at the hiring in the past couple of years, everyone has built out their sustainability and RI teams, right? That's where we do need that. But importantly, it's important to invest in training, because sustainability needs to be embedded in everyone's role. It cannot just be a team off to the side, which is an RI team or a sustainable team that's doing this. So you're going to actually have to, invest dollars, and that can be a barrier to some companies, especially companies on the smaller end.
But I think, following up on that about the training, I think companies have to really understand where they are today. They have to baseline where they are today. You could go into any boardroom around the country and they'll be able to tell you financially, here we are financially, here's my profits, here's what I'm going to make this year, here's what I made last year, here's my LTM. But if you ask them where their ESG is, a lot of them can't do that. And I think they need to spend time in doing that and understanding and baseline, here's where we are, totally understand from an ESG perspective, but then build upon that, build that strategy out, put ESG at the core of that strategy. You're not just measuring the EBITDA, the performance, you're measuring your social, you're measuring your environmental, you have key targets there. Develop the narrative around that. Investors are looking for that as well. And then that governance model, you have to make sure that we're doing it and we're complying with that. Make sure you have governance wrapped around that. It's transparent. There's clearly objectives, clearly defined. Responsibilities are there, accountabilities, and you're measured against that. I think that's where companies have to go just now.
Yeah, and I think just to build on that point as well, that the investment community is so important in actually driving change and influence. A lot of the time, I would say businesses who find this barrier is because they see compliance or this kind of investment as a cost, and businesses try to cut costs. Whereas if they can view it as an investment and a benefit to strengthen their company, but that will only really happen if the investors are serious about valuing that kind of work. So it needs everyone to kind of be on the same page to really deliver the changes that we need.
Because how robust do as you were saying there, Gerry, about knowing where they stand from a sustainability point of view, they could tell you the finances in their sleep, but whether they can actually tell them where they're standing in terms of their green credentials, if you like, their sustainability credentials. Do you think investors can see through someone who doesn't really have a firm grasp of it, or just, frankly, are paying it lip service?
No, please.
If ESG is not a core pillar of a business, then it's going to get found out very quickly. It is, greenwashing is more and more prevalent, but then we also have the CMA, we have many different regulatory bodies now that are investigating this. So the reputational risk of avoiding it is much more than the cost of actually implementing it.
And I think you can see that in companies. So many companies will produce some sort of corporate social responsibility annual report or something like that. And you can see that shifting from where companies used to report the metrics. So they used to say, we have a supply chain of 4,000 suppliers or something. We've audited 98% of them. And that would be, aren't we doing kind of good? But now investors are saying, well, what did you find in those audits? And what have you done in response? And that's where you get into, it has to be more than kind of just saying we are committed or we participate. People want to see what you're actually doing.
You have to evidence it.
Yeah.
You have to evidence it now.
And I think companies, and again the investment community is really important with this, is companies shouldn't expect perfection. it's okay to find issues in your supply chain. It's about what you then do with that. So, and people need that confidence as well.
Yeah, absolutely.
I agree. I think also, it's not a point in time discussion. We're not just looking at that point and saying, okay, what is happening? We want to have ongoing discussions with those companies. And in many cases, we do actually have a plan. What is the engagement plan? What are those issues? What are the milestones that we need to see? We need to see movement, because no company is there today. There are many we're all on this journey, even asset managers, we don't have everything figured out. We are also changing, the regulation is changing, you need to keep up to date. So we're all on a journey, but I think we do need to see companies are making an effort. If you're just there saying, oh no, I'll just wait for the regulation, it's probably not a company that will stay into portfolios a long time, and you're not going to get investor assets coming into you. So we do need to actually be on that journey together, because everyone has a role to play in this.
Because how crucial is it for the long-term profitability of the company to make sure that they are making themselves an attractive proposition for ethical investment?
I think it's crucial. It's critical in terms of, if you look at what the surveys are saying. So the consumers, they're saying that basically we will only buy from brands, that is aligned with our values. If you are not aligned with what investors want, then you're not going to get that flow. Your products, your services. At the end of the day, companies are here to provide a service or a product to investors. And if you're not aligned with where the demand is going, you're going to be impacted by that. Asset managers, for example, I mentioned earlier Article 8 and Article 9 because of SFDR. If we don't have sustainable products that clients are wanting, our profitability is impacted. Yeah. We need to make sure that, where the demand is going, we're also fulfilling that. But it's also that we want to make real world changes. If you have more money going into sustainability, they will focus on companies that are sustainable, that have more robust processes that will decrease, CO2 emissions, in terms of the products that, there's more recycled material being used. So you are going to see more real world changes. So it's critical that companies actually start on that journey, because investors will value them based on cash flows. And if you don't have people buying your products or your services, you're not going to be highly valued going forward.
If I can just jump on that. So it is fantastic to see so much action happening within the investment community, and I don't know how many trillions it is now that it's being directed towards ESG funds. Yeah. But with that comes a huge responsibility for it to be authentic, for it to really be accountable and thorough, because it is in such a prominent position that when holes are picked in it, and unfortunately that will happen from time to time, it reduces appetite, broader than just the investment community. So this is where we kind of really challenge our clients to go as far as they possibly can. Can you be making public commitments? Can you be signing up to the science-based targets? Can you be making net zero commitments? Can you be going broader than just what is being discussed internally and those private conversations?
How pushy can you be with that kind of thing, to say, look, you've really got to do this. This isn't a nice to do anymore. This is a need to do. How sort of forthright can you be with your clients in that situation?
I can be pretty forthright.
But I also think, I think that in terms of getting commitment and effective engagement, is you have to, there's business benefits in this activity. Yeah. So, one of the areas that we look at is labour shortages, and how can you respond to labour shortages? Because if you don't, it leads to labour standards issues, excessive working hours, forced overtime, etc. But actually, if you look at how can you improve retention and attraction by better supporting your workers, that has a business benefit. It reduces your costs, improves quality, all those kind of things.
Well, if anyone who's been in here over the last 2 days will know I'm a big fan of a case study. A real-world example. I keep on pushing people for case studies. Carmel, have you got a great case study of an organisation you've worked with that maybe wasn't in a great place when you first started talking to them in terms of their credentials, if you like, and their how appealing they would be for investment, and have helped turn it round? Have you got anything you could offer on that?
Yeah, I think that, we work with a lot of companies who aren't in a great place, so there's probably hundreds of case studies.
Well, we've got another.
So I think, again, it's about companies being supported to be a bit more confident in this area. A lot of companies will kind of, and particularly I'll focus on the social, but companies are frightened of kind of opening a Pandora's box. So, if I don't know the issue, then fine. But we know that you can't put your head in the sand anymore. So it is about, and I think Michelle talked about it earlier, it's trying to find partners that you can work with. But ultimately, you need to be on the ground working with the suppliers to that company and making sure that they understand why they're being asked to do things, but that they're being helped to do that. And we've seen, we launched a huge childcare program, which is kind of, you wouldn't consider part of our remit at all, but one of the major reasons that workers were leaving factories was that they had childcare concerns. So factories have a lot of space. Automation has freed up lots of production areas. So we created, with the support of people like the Lego Foundation and UNICEF, really trusted childcare facilities in factories, and worker retention rates significantly increased, massively increased. But ultimately that impacted the company's financial bottom line because they weren't having to spend so much on recruitment, on training. There was higher quality output from the factory because they had retained skilled workers. So the business case is really, really clear. And now we've set an ambition by 2025 to have about 100, we're not massive in scale, but 100 of these childcare facilities, which will benefit about 30,000 children. So, and the factories fund this themselves. So this is not about asking for grant funding or donations. The factories will pay for it because they see a business benefit. And I think that's why investors can't just ask, or companies can't just insist on someone doing something. They have to spend the time to understand that business and why it's going to be good for that business.
Because Gerry, you've got a lot of experience in business transformation in your on your CV.
Yeah.
From what you've seen over the years, how difficult, how easy is it to make those changes, particularly when there isn't always an immediate short-term benefit?
No, I think we've talked about investors a lot. I think you've got to do it in conjunction with the investors. I think people have got to work together here to make that happen. I think what I'm seeing myself is that business, the realisation that, profitability isn't just about the bottom line. It is about, you can be profitable from an environmental and a social perspective. I think it's difficult, but I think with the support of the investors, with very clearly defined and robust strategies, I think it is achievable. But you've got to keep at it. You can't give up. It's so easy that, you come against these hurdles, and every time you come against one, you've got to go over that hurdle again. And I think the more you can understand, I've heard a lot there about, the investing community and what they can do. But I think it really is about working together in this. Exactly. And making sure that the businesses are there and they've got the support that's needed to make this happen.
Because the sad fact is sometimes is the money does talk, and I guess the more ethical investment there is there, the bigger pool of money there is to tap into. All of a sudden, a few more boardroom ears will start pricking up because they think there's something there for them. There's a reason for them to do it. There's some really knowing nods happening there.
No, I think the boardroom really do realise that now. I think they've switched on to that. Let's be very clear on that. The bottom line is important. Let's be very clear on that. But they do realise that you can be profitable. You can be profitable by investing in sustainability, be it from an environmental or a social perspective. If I look at our own business, Recycling Lives, we have a phenomenal social value programme where we're invested, we work within the justice system. There's rewards for us doing that as well. We do it because it's at the core of what we do, but there's definite benefits for that. People want to work with people that are doing good. It's that simple.
It's almost a club, isn't it? You go, you do this as well, all right, we'll work together.
And the more you do, the more it attracts. You also attract employment. You talked about employment. You attract good people. They want to come and work for you. Your retention goes up. Your customer base goes up. Your suppliers, they want to work with you. You find them more amenable to understand what you're trying to do. So I think that doing good actually develops, and doing good, you can do good business and be very, very profitable with it.
Are people at risk of being left behind, though? Is there a whole pocket of business which is behind the curve, I suppose, isn't getting on board with this, and they could be at risk of getting left behind?
Well,
Yeah,
I think the answer to that must be yes. I
Yeah.
think there are businesses that could be left behind. But again, I think those businesses, there's a sharp wake-up call coming now with everything. If you look at the current economy, where we're placed today, I think in the absolute need to invest in sustainable products and services, I think that if companies don't get on board with that, they could fail. They will ultimately fail. But again, I think that comes down to the communities, the investment communities, looking at how they can support those companies. It's a challenge, but I think companies, if they don't realise now, they're going to really struggle.
I would just on that point say it's not about being left behind. It's in fact the benefit of being first to market. We need boardrooms to be brave and ambitious and think how can they do something that hasn't been done before. We're operating in an environment both from a biodiversity but also from an economic perspective that it's uncharted waters. And you need to think how can you be ahead, how can you be leading by example, and it's the others who are going to be left behind. So we need leaders more than laggards, for sure.
Yeah.
But at the moment, you open a newspaper, go on the internet, watch TV, we're all hearing about the financial situation the country, the world is in currently. Is there any risk that good work that is being done currently in ethical investment could fall by the wayside a little bit, perhaps, just to play devil's advocate, because of the current financial climate?
I think because of that, I think you do need the private sector really to step in there more and more. I think that's going to be the critical part for us now going forward. With the private sector, what we're looking for there, if you look at the current state of the economy just now, if you look at the public sector financing, it's just not there. We need the private sector to step in. We need the private sector to hopefully generate and help distribute those finances, give the support and the flexibility to these businesses that they're going to generate these new opportunities, they're going to generate the solutions to the challenges we've got just now. So I think a lot of this is going to rely on the private sector stepping in here.
But I do think there is, and we are seeing it, so actually in practice, companies are cutting back on their programs, on their support, and it really frustrates me. Obviously, that's my business, so it's frustrating, but I think it's I said this in the beginning, but if companies still see this kind of work as a cost within their business, then we've all managed budgets and people go, okay, we're in the third quarter or whatever, we need to cut all unnecessary expenditure. And this is an area that goes, okay, we'll cut that. You need the company to think about, this is actually an investment in our business. It's going to keep us successful, but that is difficult, I think.
But maybe more in the medium to slightly longer term.
Yeah, so things can be pushed down the line a little bit. So I'd encourage companies to kind of hold strong on these areas and not see it as a cost that can be cut, but an investment in the business.
From our point of view, from the investment point of view, we're seeing more and more regulation. So it actually hasn't slowed down. And this is exactly the area where we do have to invest. So you may cut other things, but this is an area you can cut because, the consequences are large from a reputational point of view, regulatory fines, etc. So we're actually seeing our sustainable budgets increase massively, even in this environment that we have right now. I think it was always the concern, as we go into these dips, are you going to see that? But I think we can look at what happened during the pandemic as well. There was a lot of investments in sustainable, and I think sustainable funds did actually really well, and it was actually a good thing because then people woke up to a lot of the issues from a social point of view. Environment has always been there, but from a social point of view, we saw that. We saw that being people saying, well, you need to invest to get the data on a social side as well, not only the environmental side. So we're seeing our budgets increase. There's no slowdown. I get invites every day. We're getting things in on the sustainability side. So I think there's less risk of that happening in the investments.
I also think that the government's got a role to play here as well.
Exactly.
You talked about legislation there. I think legislation is a key part of it, but there might also be incentives there. I think the government has to realise that they've got a key role here to support what we're trying to do.
Yes.
Oliver, when you're talking to your clients, though, What are they saying? What are the motivations that start those conversations? Do you hear the same thing a lot? Do you hear a wide variety of things?
It's a huge variety of drivers, but it is very often investment driven. If a business is looking to make itself more attractive to external investment, then it needs to have a robust sustainability strategy. But that is just one of the motivating factors. More and more consumer habits are driven by having green options, by understanding exactly where their products are coming from, and that can be from financial products through to anything that we're buying in a shop. We touched on some of the other driving factors as well, kind of employee engagement, developing your sustainability strategy to another level. There's a mutually beneficial kind of prospect to enhancing your sustainability strategy. I think just coming back to a point that Gerry was making earlier about how we can push this forwards, for me, sustainability strategies should not just sit internally as a competitive advantage. We need to share them, and if you can be the spearhead of an industry where you are sharing learnings and taking your peers with you, I believe that the reputational bounce that you'll get from that, as well as fighting global warming, which is, it's no joke, the upside to that is significant.
Because from what we're saying here, are we feeling that it's moved off the nice to-do list, and it's crept into that? It's part of what we have to do now. Do we feel we've reached that point now? It'd be great if we have.
I think we're getting there.
Yeah. Maybe in the cusp.
Totally there. I think we're on the cusp of that. But I think taking the point about what's happening, globally now, if companies don't realise where we are today, I think we're just on that cusp where things could go drastically wrong for us. And I think that this is where everybody has to step up now and realise that ESG is there, and focus on that environmental and the sustainability part of it is absolutely critical for us.
Yeah. Okay, well, let's go to some questions, if we may. We have plenty of people here. We have plenty of people watching online as well. A mic is coming from the back of the room. Luke has the mic, and we have a question just down in the middle, in the checked shirt. Thank you.
Hi, firstly, thank you everyone for the talk. I thought it was a really interesting discussion. I'm Carmel from Nota Data. We're an ESG reporting tool for corporates. So my question is actually more on the investor side, of just to hear your perspective. So a lot of companies that we work with are sort of very large companies who have the resources and the abilities to actually collect the robust sort of data that you were mentioning. Are there any sort of quick wins that you normally advise companies that might be smaller and don't have those sort of resources to hand to make themselves a more attractive sort of ESG investment?
So if I'm understanding the question correctly, it's how can smaller companies take quicker...
quick wins for smaller companies.
Exactly right, yes.
Yeah.
There are always quick wins, but it comes off the back of measuring, where you currently are. A lot of our clients, they come to us and they say, look, we've got a sustainability strategy, we've been doing X, Y, and Z, but they're actually missing the bigger picture. So there is every reason to take the time, and there are many different solution providers out there who are very cost effective to SMEs, who can help your clients to quickly and efficiently analyse where their business is at and how they can take action. But I'd really encourage you to have a strategy before identifying perhaps elements that are not going to be as impactful as others.
Thank you. Anyone else want to add to that?
I think I would support. I think the longer term view is more important. I think when you have your strategy, there will be quick wins within that strategy, but you have to have that longer term view. Investors are definitely looking for that as well, the longer term view of it.
And I think in telling the story, it's about being quite focused. If you're a smaller company, you maybe don't have those extensive resources. So take the time to really understand where your impacts are and focus on that, and if you're only going to do one thing, do it really well, kind of thing.
Okay. Any further questions? Okay, we have one over to my left.
Hello, I'm Max. I'm from Ipsos. I kind of just wanted to know your thoughts on B Corp accreditation as a kind of as an accreditation to give investors and consumers kind of insight that a company is taking a strategy seriously?
I'd be like to sort of, we're actually going through that accreditation ourselves just now, and I think we've found it hugely beneficial for us. You know, I think it underpins your ESG credentials when you're doing this, but it makes you really reassess everything you're doing within the business, reassess your relationships with your supply chain, reassess the relationships with your customers, with your own employees. I think, you know, from our perspective, we're just literally going into the assessment phase with B Corp now, which is fantastic for us. It's not an easy journey, but it's been a hugely beneficial journey for us. And I think from our investors' point of view, we've had huge support from our investors on this, and they actually point us in a lot of direction with that. I think it's hugely beneficial. It's challenging, but well worthwhile. And I think you'll get a lot of benefit just going through that even initial assessment of your business.
I think as part of the B Corp process, you actually change the legal covenants so that your business is operating on behalf of not just shareholders, but all stakeholders, including the climate. So it's a huge commitment to make, one that we would hugely encourage. It's the same as making public commitments such as science-based targets. It's being cognizant of where you're at and really dedicating in the public eye to positive change.
Okay. Any further questions from the room? We have one here, and then we'll go to the back afterwards.
Hi, my name is Rupa Ganguly, and I'm the founder of the organization called Inclusive Trade. Actually, we've just gone through the B Corp certification, and we've got it. So that's been that was like 8 months of madness, but it's brilliant. My question, and we're we're early stage, so it's been quite a journey. But my question really was in terms of impact investment and ethical investment. I know there are loads of different sort of segments of investment, and it's a bit of a minefield for someone who's not in the investment space. What's the kind of advice you would give a small company like ours, for example, and I've got a whole sort of network of small companies because we work with micro businesses, in terms of if you're looking to grow using impact investment or ethical investors, let's say, what would be the couple of, let's say, 3 key points that you would suggest to MSMEs or SMEs going forward? B Corp is one of them, but like what else would you say would be the key things that investors will be looking at?
I think first and foremost a strategy. I think you'd have to have that strategy where you're going. I think they'll be looking for a strategy that has ESG, sustainability at the core of that investment. I think they'll be looking for a business that have those ethics around sustainability. I think if you've got them, what we've found ourselves is that if you've got those business investors are keen to work with you and to develop that. But you've got to show that initiative and show that you're wanting to develop that, and having a key strategy around that, I think, would be critical.
How should that strategy manifest itself? Should that be a document, a present? What's the best way to present that? Because everyone can say that they are believing in these things, but how is the best way, from your experience, to actually present that?
From us, obviously there will be a document that comes out of it, but I think for us it has to be authentic, it has to be the core. It has to actually be embedded throughout the business. You go through the business and everybody knows where it is. It's something that you live and breathe. It's not just something that you turn the page on maybe once a month when you go to your management meetings. It's something that's live. It's there. You live it. You breathe it. It's part of what you do, and it's authentic.
Yeah.
And it has just to build on your question, actually, I'm going to ask a question myself now. But I guess what I took from your question was, who do you go to get the funding, kind of thing? So if I've got my strategy, how do I, and I'm a very small business, what might be my first steps in getting some investment impact funding? Anyone? Because I'd be interested too.
So there are a number of funds out there or organizations that focus. So it depends on, what industry you're focused in, what is it that you're trying to achieve. There's a number of funds out there, from the venture capital that starts with very small funds. There's also a lot of stuff that's venture capital, but it does have a very sustainable element to it in terms of what they're looking for. So it's hard to just give one answer because there's so many, depending on what it is that you're doing, you know, which area of the world that you're operating in, you can do that. You know, even some banks now, they do have lending programs for companies that are trying to, you know, I guess, bring solutions that will help us to transition to a more sustainable world going forward. But I think in terms of having a strategy, what you do need to have is a credible plan, right? It's good to have a strategy, and we all have these strategy documents. But what are these milestones? You know, how do you get there? What support do you need? I think it's really important to be authentic and credible in terms of what you're actually putting in front of investors.
Okay, and I believe we had one further question just there at the back.
Hey, I'm Sam Wimpress from a sustainability consultancy called Robertsbridge. First of all, thanks very much for the conversation. I thought it was super interesting and insightful. Sort of, I had not so much a question, but just to get your thoughts on it, on sort of the critique side of the ESG agenda, especially in the finance sector, is that I've heard from research and a few clients that I'm on at the moment that we've obviously seen in the news. I think the most prominent example was Deutsche Bank getting accused of greenwashing a couple of months ago, where some ESG funds are getting exposed as not actually containing stocks that are necessarily environmentally or socially friendly. And I think it'd just be good to get your thoughts on how, I don't know, maybe how you make sure that ethical investment, like the good stuff that it sounds that you guys are doing, doesn't get drawn down by those examples.
Listen, there's a risk because in terms of definitions around sustainability, those are changing all the time. I think what is key is actually to be completely transparent in terms of what you are doing, right? In terms of what is this process, what is the objective around these funds, and what is that governance process around how you do this, how do you select I guess the companies that you're investing, etc. I think in terms of the definitions around what is a company that should be in a fund, we need to be clear because as we were talking, not all companies are there as yet, right? I can make the case against oil companies, for and against oil companies being in sustainable strategies. It's really about that journey. So to me, the key thing is making sure that what you say you are doing, you're actually doing. You do have the process and the evidence to actually show that this is why you feel that this is sustainable, and so that you have, that basically back up when regulators come asking, and more importantly, when your clients come asking, because at the end of the day, we are investing on behalf of our clients, and we need to make sure that what we are doing and what we are saying is actually reflecting the values of what clients want. So I think, I'm not sure there's any, you can be completely 100% proof that you wouldn't be accused of greenwashing, rainbow washing. There's so many different things, but you need to make sure that what you are doing, you have the evidence for it to back up what you're doing.
Greenwashing is, it's challenging, and the way to address it is around transparency and thorough communication, and making sure. I'm not aware of the particular details of this example that you share, but how thorough has the strategy been at the top, and where has the buy-in come from? The reputational damage of this is enormous. Therefore, are the conversations happening at boardroom? Are the risks and controls being put in place to make sure that these strategies can be rolled out successfully? But yeah, when it comes to communicating any kind of climate strategy, transparency and thorough research and making sure that you're being holistic, it is essential, because otherwise, what you've intended to be an entirely positive strategy, can have negative consequences.
Okay. Thank you for all the questions in the room. I'm afraid there was a couple of questions online we didn't have time to get to because, the conversation's rather run away with itself, hasn't it? So Oliver, Michelle, Carmel and Gerry, thank you very, very much indeed for your time.
Thank you.
A round of applause for them, please.
Great.